All right, so welcome to the Capital Discussions Livevol Education series. This will be the first of many. Jim will start it off, and then next week I think we're having Kevin Nichols from Livevol will actually be going over, I think, the scanner, but he's agreed to come on the second Tuesday of every month, so we've got those scheduled out for the next few months. But before we get started, let me go through our disclaimer. Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. So with that out of the way, I will stop sharing and give you the ball, Jim.
And I'll start to share. Thanks a lot, Tom. What I wanted to end up doing today was that because Kevin Nichols is going to end up coming on showing you some really cool functionality with some of their scanning tools, I wanted to be able to kind of just do a kind of a preface, if you will, to be able to end up allowing those that aren't as familiar to be able to end up just getting a feel for the product and how it ended up working. What I wanted to end up starting with is basically two things. The first one, for those of you that don't know, if you end up coming on to any of the member sites, what you'll end up seeing is a banner on the side. What you'll see is that if you open up an account by clicking on this banner, Tom records it. So all you have to do is click on it once, and if you open up an account, a week later or a month later, it doesn't make a difference. Your name will be put down. You'll be eligible for a 5-cent discount off of their commissions. Tom and I are going to start to end up offering a couple of paid services. If you have any paid services on Capital Discussions, they'll give you a 10-cent discount. Now, the reason why that's kind of important, if you guys take a look at it, if I just go and take a look at Livevol commissions, commission rate, what you'll end up seeing is that compared to an IB account, if you open up an IB account, you're going to be paying 70 cents per options contract. So what we're doing, Livevol's giving you a nickel. You get another nickel if you sign up through Capital Discussions, and then another nickel after that if we have any paid services. So that ends up taking you down to 55 cents a contract versus 70 cents if you signed up through IB. You get all the IB reports. Tim, who's on the call, ended up doing some work with this. You can end up getting both systems, although the Livevol, if you trade on one, it doesn't update as quickly as you would like, and it's not as reliable. So you can't use both of them intraday. It's something I wouldn't suggest. But you could use either system. So to me, it was like you get a bunch of really cool tools we're going to end up showing you, okay, and we're going to have Livevol come on, and you can save 20 cents or almost 20% on the commissions. For the life of me, I don't understand why every one of our members, okay, who has any interest in IB or Livevol wouldn't end up doing this. Anyway, I wanted to end up showing you that. The other thing I'd show you real quick is that when you do take a look at the platform, now obviously you need a user ID to end up getting on, but it's just at livevolx.com is your download. Okay, Tom, if you just would keep an eye on the questions for me. If there are no questions on that, what I'm going to end up doing is that I will end up just starting to show you some of the tool itself. When you open up the account, you get this main tab, okay? And that's basically your key for everything, okay? That will end up keeping basically anything you do, it'll end up doing from here. You can end up typing in and taking a look at, if I want to look at SPY, okay, or if I want to end up, it would also help if I end up actually putting the whole tab on the window, huh? If I wanted to look at any of the underlyings, I could end up taking a look at Apple. It gives me some of the statistics of the current bid-ask stuff. It gives me the IV going out. The interesting thing that I kind of like about this is that they don't give me the implied volatility of, well, they do, of any, of a specific month. What they do is they normalize it for me all the time. So now I'm looking at the same thing every day. So when I take a look at IV30, this is they do the math to be able to calculate, here's what the average implied volatility is for a 30-day option. Very similar to what the VIX is for the S&P 500. Okay. They also end up doing it for you for 60, 90, and a bunch of other days that I'll end up showing you how to end up getting. But this is the tab. From here, there's a couple of quick things that I just want to end up showing you. You have a bar to be able to do, this is all your application settings, and we can go through things in detail later on. I just kind of want to end up giving you a quick overview on things. Once you build in a layout, you can export and import your layout in any way, shape, or form you see fit. You can take a picture of any one of the windows with the little camera. The other thing on here is that it's your application settings for everything. So you'll have things like for how to set up your Greeks and how many decimal places, how you want your default trading routes or percent or quantities to end up being. How you want to take a look at your implied volatilities, what you're using for your interest rates, how you're going to set up alerts, and changing any of your security stuff. What I wanted to end up getting into was basically to show you a couple of the windows. You can end up opening up any of the trading windows through here, your account, okay, your position viewer, and there's a lot of stuff. And we did do a training video on those, so you can go and take a look at that. What I wanted to end up really showing you was the Windows tab, okay? The View tab, and I'll get back to that because we're going to spend all of our time, but just to kind of end up finishing up, the View tab are the open windows that you currently have. I'm on a 4-monitor system, so these are the open windows I have. I just have them open in other places. And then the Support tab. When you take a look at the Windows tab, this is the one that ends up allowing you to open up different windows. And you can size these and shape these in any place that you want. The one that I end up finding very, very useful is the actual tabbed window. Okay? Because when you open up a tabbed window like this, and I'll just make it a little bit bigger, you can then open up multiple windows within it. So this way, I'll end up having a whole bunch of different tabs. What I've done is that I've built 2 tabbed windows. Okay, so when you take a look at this, you can end up looking at things like, for example, I'll open up an options montage. Okay, let me just close this. Okay, and here is, you can end up seeing, it's pretty kind of standard way of taking a look at implied volatility and delta, and all of this stuff is always customizable, right? The way you customize any screen is you go up to the wrench, and if I take a look at the underlying, here's what I have in the value fields. Here's my option filters of how I might want to look at things. Here's all of the different Greeks and different column headings that I can end up putting on things. What I'd like to end up showing you is that I basically, this is the way I've used this. Okay, the first one is that, went too far, sorry about that. And let me make this the entire screen so it's easier to see. I've set up my window specific to the underlying. Now, you remember the last thing we were looking at was Apple. I've ended up linking everything. Let me close this one. So let me show you this. So if I come over to here and I take a look at IBM, my entire window and all of these things all change to IBM. It doesn't make a difference to me. Does anybody care what underlying we look at? Usually I know a lot of people like to trade Apple. So if nobody ends up giving me an answer next couple of seconds, I'll take a look at Apple. Okay, so here's what I'll take a look at. I have set up this chart to the way I would like to end up seeing things. Everything on this tabbed window will end up being specifically about Apple. Then I have another tabbed window for everything that is about the market. So when I take a look at this, I'll end up seeing, here's my implied volatility, okay? I can actually change the implied volatility, or I can load up from an Excel spreadsheet or other data source the implied volatilities that I want to see in the chart. And it'll actually show me what the theoretical price will be, not as the mid between the bid and ask, but using that implied volatility. Very important. So how does it work in a default manner? The way it works in a default manner is that this implied volatility here, the IV, that is the IV of the mid price. Okay, it just takes the mid, and that's what it does. If you don't put anything in, if I clear all of my vols, and by the way, I can do that in some of these buttons here, like for example, clear vols, it just cleared everything out. Now what it'll end up doing is it will end up using, okay, the implied volatility in the IV column to calculate theoretical. But I can end up changing things in here. For example, let's say if vol went up to 90, I just typed in 90 here. Look what it did. It changed the theoretical. It also turned the ask green, because if implied volatility goes up to 90, this is definitely a buy at 645 because it is lower than what the actual price would end up being. You can end up modifying things in any way, shape, or form that you end up seeing, so you can end up playing with a lot of volatility models. This is a function that usually only the top-tier professional tools end up having for you to be able to, by individual strike, play with your volatility and do whatever you end up wanting with it. Okay. I want to go through the top tabs, and I want to just end up showing you this top tab here. This is what's known as the options montage. From here, you're going to basically be able to do almost everything. I did do a video on this, so if people are interested, go through it more. Some of the things I just wanted to end up pointing out to you guys, if you ever wanted to take a look at what the implied volatility skews look like, I can end up hitting, okay, skew, and now what I'm looking at is I'm looking at all of the strikes. Boy, this looks too busy, so let's maybe only look up and down 25%. And these are all of the months. Way too many, right? So let's only look at maybe the first 6 months, and I don't want to look at January 9th, so I'll unclick that, and maybe I don't want to look at, I definitely want to look at February 6th since that's my wedding anniversary. But I don't want to end up looking at these. So now I can just see the specific months that I have. And also, you know what, if they're under 25 cents, maybe there is too much noise. So I'm only going to end up looking at the ones that are above 25 cents. Here's my skew. Okay, now I can take a look at what the implied volatilities are. Let's take a look at this graph. On the bottom is the price. So if I hold my cursor over a specific dot, you'll end up seeing that, well, let's pick one that's actually, you know, post-split. Here's the 105 put, okay, January 17th, okay, trading at 180 by 185 with a mid-price volatility of 34.51. I can see where the implied volatilities are, so I can see what's happened at different points. Now, the other thing, and I'm not going to end up doing this, I can end up going back and I can take a look at how that volatility's changed over the last couple of years. I can take a look at the last month. I can take a look at the last, 6 months or whatever. A great way to understand if I'm selling something that, say like, for example, in the put spreads, if you guys remembered what we ended up doing with Bill Visconto, Bill was looking at the RUD and the SPX for us and seeing how expensive some of the implied volatility stuff was that we were doing. So what I'll end up doing is if I take a look at, say, this skew, now this one is really messy, right, because there's just a ton of stuff in this one. So let's definitely get this over here for 6 months, maybe only look 10% up and down. Let's get rid of everything but maybe a single month that we're going to end up looking at. Or a couple of months. Okay. So what I can see here is it's interesting, right? Because we go from the gray line, and then if, right, this top one here is February 20th, and then the next one is February 27th, and the next one below that is May 6th, and then May 13th. So take a look at what ends up happening. As we get closer to expiration, that curve going to the left, we call it skew, it's getting steeper, right? It's getting steeper. If I come out here and I take a look at the leaps, look at how flat those leaps are, okay, the 1 or the 2-year leaps, how flat they are compared to where we are currently. So you can understand and you can see what ends up happening with your implied volatility and how things end up changing. And again, is this steeper than normal? I don't know. Go back and play the video, okay, for the last month. So what will happen is when you end up hitting the play button down here, it'll take a few minutes, okay, because there's so much data here, but it's actually going to end up pulling in all of the data, what the skews look like for all of this information over the last 1 month. And once it loads everything, it'll actually play a video for you, and it'll take you through day by day by day. You can stop it. You can rewind a day. You can end up going from one day, looking at one versus another. So there's just a ton of information, and you can see there it is. It's just playing through what the vols look like. So I can look at any specific day, see what's happening, see if the vols have gotten steeper or less steep, okay, over the last, few months. If I want, I can end up taking my little cursor over here and I can move it on a specific day. Oh, look at this. I don't want to look at these old December ones, so let me get rid of those. Okay, I can go back and I can take a look at any specific ones that I want to end up seeing, and I think it's just a great way to end up understanding how some of your trades have changed. You know, what Bill Visconto showed us was that because this put skew got steeper, meaning that the puts going, 2 months out or a month out where we normally would sell an iron condor. Think about what we do when we sell an iron condor. We're selling a strike closer to the money, and then we're buying one further away. Well, when the puts get steeper like this, that means that we're getting less money for what we're selling, and we're paying more money for what we're buying. That's what made the iron condors just so difficult to have some of the older, I'll call them the no-touch strategies, end up working. We didn't have the same competitive advantage, okay, or statistical advantage, because we were paying too much for what we were buying and we weren't receiving enough for what we were selling in those put spreads. Okay. Anyway, there are a bunch of things over here where, like, for example, they have a dividend tool. And by the way I got these was that I just came to Window and I just added whatever I wanted to end up seeing. Of course, there's no data here because the S&P 500 does not have earnings as a stock. So let's go back to Apple. So it shows you the last 8 earnings, and we've gone through some of these things. I wanted to touch among a couple of things. Number one is the charts. One of the things that I look at all the time is that I don't do any of my technical analysis stuff through here. I'll just throw some moving averages on. It's basic stuff. You can throw Fibonacci's and moving averages, a couple of basic studies. But what I really like this for is that I want to end up seeing this down here. What I look at is I'm looking at the implied volatility of the 30-day, 60-day, and 90-day. Now, since this is a history, and the 30-day is always the 30-day option, looking back and seeing how it's changed over a period of time, or how it's changed, let's say, compared to the 60-day implied volatility, is absolutely key. Now remember, this doesn't show us skew. This doesn't show us that the puts were more expensive than the calls. This is just the average of the 30-day option. So I can see what's happened here. I mean, this is kind of interesting. Look at what happened to the 30-day versus, let's say, the 60 or the 90-day. You know, boy, the calendar traders made a ton of money here in December, didn't they? If they sold the 30-day option and then they ended up buying the longer-term stuff, the implied volatility of the front month got crushed compared to the second month. Okay, kind of useful information if you're a calendar trader, wouldn't you say? You can see when vols spike at different levels. You can also see, well, how difficult has it been to end up trading? Like, for example, let's say if you're a 60-day iron condor trader, okay? This is kind of an interesting graph to me because what this ends up showing is this shows here's the implied volatility for 60 days versus the actual volatility. Now, granted, there's a 60-day, right? The implied volatility is from this point looking forward. The historical volatility is from this point looking back. So there's a bit of an offset, but usually when you have a large price move, it tends to end up making the implied volatility go up also. So you can end up seeing, okay, it is Apple moving more than the implied volatility. Have you guys ever heard me saying we're not being compensated for the risk that we're taking if we sell this option? What I mean here is the implied volatility higher than what we're actually moving? For those of you that actually sat down and read the, whatever it is, 1,200 pages, that's what it is in my copy of Larry McMillan's Options as a Strategic Investment, one of the things that he showed in this book, whatever it was, 20 years ago when he wrote it, was he showed this graph by month on the OEX. Remember, we didn't have the SPX back then. Okay, and what it showed is that the actual volatility, and he just tracked it by month. September was the only month of the year where we had higher historical volatility than we did implied volatility when Larry wrote his book and he put the diagram in the book. I forgot. It was someplace in those 1,200 pages. But I remember making it such a great impression because what are you doing? Okay, if you ever sell an option or sell any type of a spread, you're basically making a bet to saying, I don't think the market's going to move as much as the implied volatility says it's going to move. Well, guess what we have here in Apple? The implied volatility in the 60-day is pretty consistently higher than what the implied volatility is pretty consistently higher than what the historical volatility is. So I'll end up always going in and being able to end up taking a look at these things. I'll look at skew and I'll take a look at these things. Right? Two great tools. Some of the other things that I'll take a look at, okay, all the time is that there's this statistics tab, which I think is absolutely great. You'll see the 20 largest trades of the day in the options. The red means that they were sold lower than the bid-ask spread. White means that it was traded within the range. Greens means that it was traded in a bullish format, meaning they paid more for it. So I can see what ended up happening. Like when I come in here, I'll take a look at this and, like, for example, see these two 3100s? 3100 on each of these things? Right, January, pretty sure that this was going to be traded in a single spread, right? I know it was traded within a spread, okay, but it was probably a risk reversal, either somebody getting a long or short. You know, I take a look at this on the call. Well, look at this. Somebody was selling their call. It was just a buy right? So if they can end up doing this, intermarket sweep just means that the markets got out of sync. So this was a computer robot coming in, buying on one exchange, selling on another, and it was just an intermarket, sweep of being able to get the markets back in line. So you can end up seeing the large things. You can end up taking a look at what the call volume is, what the put volume is, what the total is, what their ratios are. I love to look at these statistics. How many were sold on the bid? 35% of the calls. How many were sold on the bid in terms of the puts? You can end up seeing all of the statistics of what's gone on and how they've ended up moving. You know how you talk about, well, I'm not getting filled at mid-prices or it's difficult. Do you have the ability to end up sending to one exchange or another? Here's a breakdown of the volume by exchange. Okay, you can end up taking a look at, what the VWAP. I know a lot of people love to look at VWAP when they're trying to end up getting into a position or out of a position. You can end up seeing what the high implied volatility was. Okay, the 30-day high implied volatility, what the low was on the 52-week. You can see what percentile we're trading in, right? How many times people saying, well, you should only trade when you're in a certain percentile. Well, take a look at this right now. Okay, we happen to be within the 100th percentile. Okay, volatility is pretty high right now. Okay, this is the time when people say, well, I'm nervous. I should be buying puts. You and the rest of the world. That's why the implied volatility is in the 100th percentile right now. So is this the best time to be buying puts? No, statistically, you should actually be selling them at this point, right? Skew is probably, reasonable at this point. The market's taken a beating. People are bringing their firstborn to the marketplace and trading them in for puts at this point. So yes, you are going to pay a premium. Will you overpay? Depends on what the market does, right? But statistically, on average, you're overpaying because the implied volatility is so high at this point. Another thing that I end up absolutely loving is that I can go back. Now remember, a lot of people pay for data. If you wanted to see what something was, you can go and take a look and see and here you can choose any one that you want, right? But if we wanted to end up going to see, the February 6th, right? Let's go to February 6th, 105 put, okay? And I wanted to end up seeing what the trades were today. There they are. Okay, you want to put in a filter. You only want to look for the trades that say, oh, we're trading this option, okay, at a certain price. How good was your fill versus another? You can end up pulling all of this data down from any day. Okay, the fact that you end up, most people end up charging you huge amounts of money for back data. Here, if you want to end up looking anything up, you can. Amazing to me about that tool. The last thing they end up having here is a fundamental tab. Tend not to use it as much, but I'll end up if I don't know the company, I'll come here and I'll just read real quick about where they are, what they're, and just some of their fundamental ratios and things like that. Anyway, you can see this entire window is set up on nothing but Apple. No general market stuff. It's only for Apple. When I go and I end up changing my main tab window to back to IBM, okay, this entire window ends up going to IBM. Now, the one thing that is kind of interesting, and I didn't realize that I had this thing covered. Can I move this? Yeah, I can. Let me just put this up here for right now. Okay, is mapping. Okay, so what this ends up showing you, okay, this is the membership that IBM is in. All of the ETFs, all of the indexes, everything that IBM is in, okay. You can also see here what they end up considering, okay, that sector and industry group. Now, IBM is pretty much a conglomerate, so maybe it's not the best to end up looking. But if I go and I take a look at, I don't know, let's take a look at somebody like a Tesla, right? They're going to be a lot smaller. Help if I could spell, too. Okay. So over here, you're going to end up seeing what, again, from SIT code, right, from a sector and industry code, you'll see who the competitors are, or at least how they've been going, and which indexes and ETFs they're a part of. Okay, very, very interesting. Especially as you're going through rebalancing and things, you can end up seeing, okay, where your specific stocks are. Okay, any questions about the individual tab? Because I wanted to get over to the market tab that I set up, because this is the one that Kevin Nichols is going to end up going through and showing you some of the tools that they end up having.
Yeah, no questions yet, Jim.
Okay, so let me move this out of the way. And let me pull this one down here. Okay, make this large. Okay. I'm not going to end up starting with the Pro Scan. That's going to be the last one that I go to, because This is the one that Kevin Nichols is going to go through, so I will touch upon it afterwards. I'm going to start with sector. By sector, you can see over here a snapshot of the market, and this is always kind of interesting to me. This is the dollar volume of the puts and the calls broken down by sector. A lot of puts, okay, volume today, huh? Especially in things like consumer cyclicals, right? Technology also pretty heavy. You can also end up breaking things down, like, for example, with oil at free. Well, no, we're not quite to free yet, but we're heading there, aren't we? You can end up seeing some of the volume alerts that we ended up having in terms of their, in terms of the options volume. You can see what the volume was, what the average volume was, and how much of it traded out of the money. You know, out of the money is always kind of interesting because to me that's where a lot of people are probably buying insurance, right? You can also end up seeing, okay, statistically, they're not saying that these are good or bad. They're just saying statistically, these are the 4 underlyings that have the highest yielding covered calls. So you can end up getting a 10% premium and a 13% return on your money if it gets called away by selling the 12 strike on NBR. Okay, so in any of these things, okay, you can take a look at just saying Netflix, Yahoo. You can end up seeing here's what the premiums received by selling that covered call. Okay, and what you would end up getting. Again, they're not making any comment. This is a good, bad, or indifferent thing. They're just saying this is the one with the highest yield. So these are interesting places to end up looking if you are a covered call seller. And since we're going to be doing a covered call class later this month, and we're going to be going through some covered call stuff, this is one of the places where it's always kind of interesting just to see the information that they end up having on it. Okay. You know, watch lists are interesting. I've broken things up into different things, like, for example, so, you know, I'll have an index, okay, watch list. I'll end up keeping my stuff in here. What I like to end up doing more so than looking at a watch list is taking a look at the stock monitors. I break things up and I look in folder views, so I'll end up keeping, you know, my indexes over here, my volatility stuff. I always take a look at percentages, and the thing that I like about this one is that, you know, quite frankly, I don't need to end up seeing the PE ratio of something or the beta of something. I want to see what it's changed, and I want to see what the IV's changed. Okay, there it is. Okay, so it's nice, it's clean, it's simple. I've structured it of the things I'm looking at. Okay. Calendar for anybody who's trading individual stocks, you know, I'll always come in here. I have this on all. I can just check my watch list now. These are only the stocks that I had on my watch list. They'll end up telling me about earnings, dividends, or anything else. You know, if you're ever trading, you know, I can usually see from the implied volatilities of what I'm doing if there's going to be earnings or a dividend, but I will end up coming over here and I'll take a look at it. Okay, pretty important. Okay.
Hey, Jim, I did have a question. Brad wants to know, he's talking about he likes to graph the IV30, IV60, etc. through time on the graph of the underlying. Is there any way to export the historic values to a spreadsheet?
On these, the historic values of which ones?
Like IV30, 60, 120.
Yeah, I don't, if I come over to here, we're not talking about the time in sales, huh, Brad? What we're talking about is appropriate. Okay, I'm just reading the graph. On the graph, not on the graph. Okay, you can end up taking pictures of things on some of them. Okay, on some of them, if you hit the wrench button, you will end up having some things where you can end up exporting. Okay, underneath general, I'm bound. And the answer is we're going to have to end up waiting for the Livevol guy to come here because I don't know how to end up doing exports.
And then Tim had a question about, can you elaborate on the frequency in which historical option data is available, like end of day, or is it more intraday?
I'm sorry, that which is available?
I think historical option data.
Historic option data is only updated on a daily basis. It's just taking end-of-day pricing, and that's what it's looking at. Okay. The thing that we're going to end up having, Tom, any other questions?
No, that was it.
Okay. The thing that we're going to end up having the Livevol guys come in, and this to me is really probably one of the most powerful things in the tool. Sorry about that. Somebody's being very persistent. One of the things that we're going to have them come in is taking a look at, would it make the most sense to take a look at from a scanning perspective, what to look at, right? What to look at. So here is their Pro Scan tool. This comes with the brokerage platform. Okay, you can end up taking a look by underlyings or by strategy. Okay, I'm going to end up now, we're going to end up going through this. So for example, if I wanted to end up looking at covered call candidates, okay, there's a whole way that I can end up taking a look at best covered call candidates, okay. So these are the specific strategies you have: cash secured puts, covered calls, iron condors, protected puts, and verticals. Okay, so they've already built all of these things. You can also take a look by underlying. And then they have two things. They have pre-canned scans for you, but they also then have a scan builder. So for example, okay, and this is the stuff where, you know, I'm pretty excited that they've agreed, Livevol's agreed, that they're going to have the guy who's in charge of the product development of this, who is looking at it and working with their clients every single day. He's going to come on once a month and just go through, hey, here's some of the, you know, cool scans that he's seen during the month and different things that he's done. So for example, these are their most used scans. So you can end up taking a look at, here's a scan on what IVs have increased the most. Okay, so you can take a look at, here's the IV and here's the percentage that it's moved up, okay, over the last 5 days. Okay, so you can take a look and see what IVs have gone down. Wow, things have actually gone down over the last 5 days. Who would have thought it? I wouldn't have. You know, you can take a look at things that have particularly high open interest, something where the put volume has picked up, okay, the most. So they're going to give you just a ton of trading ideas. Okay. Again, they're not making any suggestions. They're not saying this is a good or a bad trade. It's just a statistical, you know, scan that they're going in. They're finding things out. There's also ways to end up taking a look at, like, for example, there's some pre-canned scans on earnings. What's happened to IVs? Have IVs gone up pre-earnings? Okay, has the price gone up pre-earnings, or has it dropped pre-earnings? So you can end up taking a look at any of these scans. Now, you can also end up building these scans. So like once I end up choosing one, I can end up copying the scan, put it in a folder. Okay, I won't do that right now. And then I can go and I can open up the scan, and I can then end up building my own scan. So for example, if I wanted to end up taking a look at, let's say, last price, what I'd end up doing is that I would take a look at this, and what I can, and we'll end up going through it. Okay, I'm not going to do this now because this is what Kevin's going to do. And you could end up then taking a look at the companies, sort in whichever order, what the minimum price would be, what the maximum price would be, and it would filter everything else. So this was, let's say, if, you know, we wanted to call this minimum price. Okay, and what we're going to end up doing is that we're going to end up having it go from descending order, and we want the price to end up being at least $50. Okay, and we're going to go in, and then we're going to end up finding things that have implied volatility. Let's say that they're 30-day implied volatility. Let me go over here. Their 30-day implied volatility, right? IV30 has a minimum of, let's say, is trading at 35. Okay, I can end up running these things. I can end up previewing and taking a look at it and actually building, okay, a scan of anything that I wanted. When you take a look at like these IVs, take a look at what we have over here. So if you wanted to take a look at what the 5-day, okay, or 3-day, or how close something is to its 52-week average in terms of its implied volatility, the number of scannable things on implied volatility, as you can see, is just enormous. You want to take a look and see what something's trading in the IV 30 percentile, IV 30-day, what percentile it's trading in, what it's changed. You can end up scanning on just about anything. Okay. Now, these are all things that they ended up building out specifically for earnings. Okay. If I wanted to go and take a look at just implied volatility by itself, not for earnings, there's things here where you can take a look at, the top gainers. You want to take a look at what the highest gainers were in the pre-scan stuff. Here are the largest 5-day implied volatility gainers. Okay. Did any of them move up, okay, where it wasn't warranted that you should be selling the higher implied volatility? Are they moving up for a reason, and you should stay away from them? Okay, so there is, like I ended up saying, there's just a ton of different ways to end up either building your own scans, using their pre-existing scans. You can end up taking a look at option volumes, what they've done on their call. To me, I take a look at these level of tools, okay, and you think about what they ended up doing. They used to sell these tools on an institutional basis, okay, and now what they end up doing is that they include this, okay, in their brokerage platform to end up including for anybody who has a brokerage account. And they charge you about a minus 15 cents, okay, a contract to end up doing this if you signed up through Livevol, right? They're giving you a nickel discount off of IB and the tools on top of it. So to me, I kind of take a look at it, and when it came to, trying to pick partners that I thought ended up having real value for the community, this was one that to me was almost a no-brainer, okay? So I just wanted to kind of give you guys an overview. Next week, when Livevol comes on and they start to end up going through, they're going to go through some specific examples on how they use the scanner, what they end up finding out. I just wanted to end up kind of doing a high-level introduction so that this way when you watch next week when Kevin Nichols is going through things, you already have a frame of reference of the tool, what he's doing, how it'll end up, how he's building the tool, what it ends up going. And again, the tools are available through the brokerage platform. Tom, you've seen me do this, and you've kind of worked with me on some of the stuff. Anything else that you think that's important to cover here?
I just wanted to clarify. I know I was under the impression before that if you opened up a Livevol account, you could use IB's Trader Workstation, but you couldn't execute trades through it. But I think from what I'm hearing is that you can still use Trader Workstation, but maybe not at the same time you're using Livevol software. Is that right?
What happens is that you can use Trader Workstation, and I know you can look at Trader Workstation to view all of your stuff. What they don't have built yet is they don't have they've been trying to get this working, where they have the real-time connections where if you actually do a trade on one system on Livevol and then you end up looking at your IB system or vice versa, they're not real-time linked. Right now, they only do their successful linkages at the end of the day.
Would it be possible, for instance, to open up an account with Livevol, get the lower commissions, and then just do everything through Trader Workstation? So you're essentially still using IB, just at a lower commission rate?
Yeah, the answer is I think that you can. I don't know what you give up in terms of your Trader Workstation platform. That's something that Artie Tolandini, who I had worked with, or you know what, you can also just end up calling up the help desk. That would probably be the best to end up doing.
Okay, maybe Kevin will know next week when he's on.
Yeah, definitely can. Tim asked about tracking a particular spread. Tim, the way I end up doing this, and let me just close this over here. Oh, let me move this back up because this was a different window. Let me move this over to here because I don't want to see this right now. I'll get rid of the scan. And I was pulling this in when I realized I had done that. The way I look at this, you know, one of the real problems with Thinkorswim is you get one trade ticket, right, along the bottom. You know, I always kind of hated that. So if I go over and I take a look at, and let's go and take a look at Russell. I know a lot of people like Russell. So one of the things that we'll end up doing is that if it's a live trade, they keep it for you on your trade. I'm on an empty account right now, so I don't have anything to end up showing you. But yes, you can end up keeping track of things on your account tab. But let's end up saying if we were looking at putting on a butterfly below the money here let's just choose 1140, and I want to take a look at maybe doing a 50-point wide butterfly. Okay. I come over to here. I go to 90. Did I get that right? Yeah, I think I did. And once I end up right, because this is the simulation. Here's my position. I don't have anything in here. Here's my simulation. Okay. If I go sim to complex, what happens is that it creates this ticket. Okay, I can lock in my price if I want to, and it has my ratio. I change my quantity here to whatever I want to end up trading. So maybe I want to trade 5 of them. Okay, tells me what my debit would end up being. It ends up showing me here what my Greeks would end up being, at least for my delta, right on my tab. It shows me what the size is on each of the bid and the ask for the entire spread. And then it shows me what my mid is. Again, this is a theoretical mid, so if I've played with my implied volatilities, this is going to end up also changing. And I tend to end up, okay, and the reason why I have a multiple monitor screen is that if I'm looking when things get busy, you know how difficult it is with some platforms, especially Thinkorswim, I have to load up this trade and then load up that trade. What I'll end up doing is I'll load this trade up, and then I'll end up going on a different one, and I'll load up multiple trade tickets. Okay, and I'll have different trade tickets, okay, in place where I'll end up looking at things. I can end up clearing this thing out, right? I can clear it out, and then I can end up going, not on the same tab, though, right? If I wanted to have 12 different trade tickets, what I'd have to do is I'd have to end up closing this tab, opening up a new option montage. Well, let me show you real quick. Come over here. I'd open up a new option montage. And maybe on this one, I just want to end up buying, buying, what did I do? I did the January 9. I will clear my sims from here. And maybe over here I want to take a look at buying a put vertical, right? Something that's probably pretty popular today. Okay. And so what I end up doing is that now I ended up creating a new order ticket, and here was the old order ticket that I just moved to the other page. So I can keep multiple trade order tickets. I stack them up. I put them on the side once I end up having the ones that I want, and I build them out. Okay, so this way you're ready for, and you know, in the market, the market started to move, so maybe we're going to end up buying the 1120, 1080. Okay, and so you can end up seeing what the bid and asks were, or you can see what your deltas were. You can keep your multiple trade tickets open. If you're watching pricing by simply clicking on any of these pricings with an underline. If I click on 67, it puts it in my price. If I click in 40, it puts in my price, or I can change it to 65 or whatever I want, or I can type into it. Once an order's in here, okay, the status will end up coming out, and I don't know if I can end up putting this on. The market's closed. Yeah, see, rejected. But here's where the order status is. If it was live, I could modify. I could change prices, and let's say I want to end up now only wanting to pay, 55. I could come over here, and if the market was open, I could end up modifying it, or I can hit cancel. Okay. So if you wanted them, if you didn't want to end up building it the way I did, I could end up clearing this out. Right, and I could end up then putting in, let's say, I wanted to end up buying that put spread. Okay, I can end up just choosing. Okay, I'm going to choose this month. I'm going to end up choosing this strike. Then I'm going to end up selling. Right, and there's my. I chose different months. I guess I did a vertical. Right, I should have probably done it all in the same Feb 6. There we go. Okay, so now I have my vertical. Okay, so pretty easy to end up doing if instead of that, it gives you basically all of the stuff, your condors, okay, or your butterflies or your strangles. You just have to end up clicking on your days and then your months, okay. And it'll end up building it out for you. I tend to end up liking much more to see specifically. I will tell you that 99% of the time, because I'm looking at this, right? I don't want to just do it blindly. I want to see what the implied volatility is. I want to see what the price is. This is just a basic screen. On my other one, I have all of the other Greeks. Besides implied volatility, I have open interest and volume here on the side. But I like to also see all of the Greeks. And if I show you some of these things, here, underneath the options, not option filter, right, so I can end up seeing here what basically anything was. You want to see what the IV changes were. You want to end up seeing, IV on the call versus the bid versus the ask. You can end up seeing a lot of that. I tend to end up keeping it relatively simple. I look at my 4 Greeks. I look at my implied vol. I look at my bid ask, my theoretical, my open interest, and my volume. That's what I think you end up needing most. Obviously, that in your position. Okay, and that's pretty much the way I would end up taking a look at it.
And a couple last questions. George asked about the data feed subscription. Do you subscribe with Livevol Securities or IB?
The subscriptions are going to always be through IB. So if you're familiar with their subscription services, if you are considered a professional by IB, you will end up paying for your data. The only people that should be paying for data are either people like myself, licensed investment advisors or other brokers, professional managers. They will consider any type of a business account to be a professional account. So you have a limited partnership or something like that, they will end up considering that a professional account. If it's a partnership with just you and your dear Aunt Sally, no, that'll be your friends and family. You'll sign off that you and Aunt Sally are related, okay, and it's just the 2 of you, and you won't end up paying anything.
And then George asked, do you have any examples of options on futures? Did they add that yet, futures options?
They don't have that through the IB platform, no. Okay,
oh,
because that is a whole separate set of regulations. That is something that, and also the thing is, quite frankly, your some of your stuff changes. Your margin requirements and so many of your other things change. That it's for right now, it is something that's on their development plan. and I don't know where it is. It's a question for Kevin, especially since he is, I think his title is Chief Product Officer. So he's responsible for all the product development stuff. So he can definitely let you know where that sits within his priority scale. One of the things that you know they right? Why are they helping us so much? Why are they willing to help you guys so much? Is that this gives them an opportunity to get closer to their actual traders. And to have a community like this, our voice is a lot stronger than the people one-off, okay? Single user here or single user there. Here it's kind of a collection, and so being able to end up getting feedback is, you know, they think that that's, you know, their breakfast of champions.
And then looks like there's one last question from Tim about closing a spread. Do you use the complex order ticket, or is there another way for open positions?
Okay. Tim, watch this one because it might go by too fast. I come up over here, flip. That was it. Okay. So if you end up opening up a ticket and then you want to end up getting out of it, you can just literally flip it, and then you got the exact opposite. Okay. What I tend to end up doing when I'm closing an order, if I don't have the ticket open, it'll end up actually having in position here what my actual positions are. So what I'll do is that I'll just end up putting everything back. This is me personally, by the way. One of the things that I always want to do is that I want to keep one lots, and I want to change my pricing here with quantity. Because if I make the ratio, let's say 100, 200, 100, that means that I can only trade in that multiple, right? I can only trade by 100 lots, if that's what it was, minus 100 plus 200 minus 100. So I always put in the minimum ratio and then change my quantity down here on the bottom. I think that that's really, really key. I don't care what the price was times 100. I want to know what 1 is. Okay.
Well, I think we've run out of questions, Jim, so many thanks for the overview. That was good to see.
Good, good. I hope you guys tune in for Kevin, and as he goes through the scanning tool, I mean, it is just, I don't use it that often. This is why I want the Livevol guys to come on. But I know that some people, when it comes to, especially when we're going to start to end up doing our covered call class, you know, finding candidates and taking a look and using this will end up being a massive way of being able to find good candidates. You can also provide it lists and saying, off of these, I think it was it, I don't know who ended up asking before, but somebody ended up asking, can you end up providing different lists? It might have been Brad Hartman. You can end up actually providing it, a list of the IB50, for example, and saying, on that, which one is the best covered call candidate? By the way, that's a bad trade. Don't do that. The reason why it said it's a bad trade is because the thing is that usually what ends up happening is stocks that have, and you're going to see this in the covered call class, stocks that are very high volatility and are in a upward momentum tend to be poor covered call candidates. So doing a covered call on the IB50 tends to end up being that you're giving up more of the upside potential than the money you're receiving for it. Statistically, and I've run some studies on that one is not a winning trade.
All right, Jim. Well, again, thanks for the presentation. Thanks, everybody who stayed with us. And like Jim said, I hope you make it back next week. All these recordings, of course, will be in the library, available 24/7 whenever you want to review them. So we're happy to provide the extra education, and I know, like Tim said, education on Livevol is sparse, so we're glad to add to the knowledge base for everybody.
Yeah, what we'll probably end up doing, Tim, is that, do we still have that page up? I started to end up doing this, by the way, and I probably should have started here. Was it underneath library, Tom, we had done, or was it underneath tools?
For what are you looking for?
The couple of Livevol videos that I ended up recording.
Oh, I think that's on the, click on blog. That'll take you to the public site. And
Okay.
then under training. That kind of middle, yeah, there you go.
Yeah. What we'll end up doing is that maybe what we can end up doing is we'll end up getting that I don't see them here. We'll end up maybe getting those in an easier place for everybody, because I started to end up doing some tools or I started doing some resource, whatever on the training stuff on those videos. So Tom, maybe you and I to talk offline, we end up putting that someplace where it's just easier for folks to end up accessing.
Yeah, that stub must have gotten changed, so I'll look it up and figure out where it is and rebuild it, like the phoenix out of the ashes.
Thank you very much.
Okay, thanks everyone.